the StockMiner.com studios here in the Black Hills of South Dakota. I'm your Stockminer, Brian Johnson. And, okay, Monday. Look at this. I'm not doing a video on Tuesday. One of the big reasons is we have a shortened week with Easter coming over the weekend. Good Friday. Markets will not be open, so here is your weekly expectations. Tomorrow we have FOMC, and that'll happen about 2 p.m. Eastern Time. Expect some movement early tomorrow morning. Usually the markets will pick a direction to begin the day. Not necessarily right at the beginning of the day, but within, I would say, that the first half an hour. You'll get a market direction where it'll actually start and consistently stay one direction. At that point, it'll move for about an hour, hour and a half. Then it usually flatlines until after the FOMC minutes are brought out. And then you'll see something maybe into the close. Now, excuse me. Now, keep this in mind. Coming into a shortened week, Wednesday afternoon, watch for things to really start to slow down. And by Thursday, especially Thursday afternoon, look for them to be all but dead. So treat Thursday as you would a Friday in the sense of we don't see a lot of action from about the first couple hours of Friday morning. We'll get some good movement, and then after that, if it kind of just goes flatline the rest of the day, expect that on Thursday, and more so because we're coming into a 3-day weekend, and B, a holiday. So people are not going to want to be trading coming into late Wednesday and especially late Thursday. They'll want to have that all wrapped up. And you won't see a lot of people taking huge positions on Thursday because who wants to do that? It's a 3-day weekend. They'll wait until the following week to do anything major with their movement. So you watch the volume slowly start to leak out of the market as we approach Easter. So there's kind of your weekly cap. Keep that in mind too, because it's a little bit more risky to play when the markets start to get a little less liquid. They don't move as much. Things you think should happen don't typically happen. The volume just isn't there, and it's not unusual. It's not completely out of the question, but it is unusual necessarily to kind of crash into a major holiday. So for those of you maybe expecting a huge move down, I'm not saying it can't happen, but I'm saying that I probably wouldn't be counting on that coming into, Easter weekend. So that might be better left for sometime later this month or even maybe later next month. A lot of the larger time frames are looking just fine from a trend standpoint. So anyway, want to give you that recap so you kind of have a better feel for maybe how you want to trade. I've been telling even my subscribers that by Thursday afternoon, you should be all but sitting on your hands with your trading. I wouldn't necessarily take a huge position of any kind Thursday afternoon in the hopes that it might go up or might go down coming into Monday. Everybody's looking for that Black Friday move or whatever the case might be. I probably wouldn't position myself that way. If you can, stay flat over the weekend. Let the 3-day weekend do what it wants and enjoy your weekend. Don't, that way you're not stressed about what's going to happen come Monday morning or anything. Okay, let's take a real quick look at the charts. Here's the Dow. We broke this overhead right here. Didn't quite get over 13.3, which is actually my next overhead level to hit, but we were in a symmetrical triangle here. And we broke that now today, so it's still more bullish than anything else. So on the Dow itself, you can see it winding its way to the upside. Here, we had a shot. Maybe the bears were going to take over. No chance. Today we broke that high. We're back up into that 13.3 mark. That'll be your area to really watch closely going forward, is any break up and above that 13.3 area. The more major area to the low side is, and has been for me now for quite a while, actually 13,000. So these are the two larger areas that you'll want to be watching within your trading. There's opportunity maybe in between all of this, but if you're the more conservative trader, 13.3 and 13,000 are your two larger areas of support and resistance that you'll want to keep your eye on. Today you'll see that poke up and above this area only to come back. The Dow was actually weaker, not unexpected. It typically is the weaker of the three major indices, but today, considerably lagging. It was really quite a bit further behind where everything else was at. 0.4%, where the Nasdaq was more than double this. So keep that in mind. As you can see, things are starting to get, maybe a little bit more tired up here, only because of the weekend. You can see the volume starting to drop off already. I would expect to see that most of the week, right around this level, at this level, or below this level for your volume. Just because, like I said, people are preparing for the weekend. This whole move here could be represented as an ascending triangle, so I'm not saying that we can't go higher, but I will tell you that on any move to the upside, I would be carefully monitoring any of those moves, especially indice related. From a stock standpoint, like we follow Apple in the subscribers newsletter, and it's been just a monster to the upside. Obviously, everybody knows this, right? So in that case, holding overnight from the long side on Apple, okay, whatever. But holding overnight on an ETF like the SPY or the SSO or whatever, FAS, even FAZ, those TZA, TNA, yeah, not so much. I'm not real excited about doing that. So be careful. Use good risk management here. Over the next few days. Here's the NASDAQ. You can see how we've kind of I just drew in this line to put in for you guys. We've been following this one a while in the subscribers newsletter, but drew this one in for you guys to watch. And you can see how now that we've broke it, we've tested it, and we might even get another retest of that as well. Looking for maybe the potential for a double topping area, but that's going to be up around 28, which will also coincide with the backside of this line. Something to watch very carefully here. Watch for this consolidation. See if it'll hold between 28 and 27.50-ish or so before the end of the week. Let's see if the markets just decide to consolidate the rest of the week as well. For your NASDAQ, though, 2,800, and I'm going to say 2,700. 2,800 and 2,700 for the more major areas of support and resistance. Have them marked on your chart. Same thing here. Nice push upwards, up over 1% today in the NDX. The NASDAQ was like 0.9%, so you can see the strength still there, still remaining within the tech stocks themselves. They've just been difficult if not impossible to play short. So why? Why do it? I'm not a big shorter of the NASDAQ. If you followed me for any length of time, you know this. This is exactly why I don't like to play the NASDAQ short. I'll play the Dow, the Russells, the SPX, you bet, bring it on. But the NASDAQ short, ugh, I don't know. There's better options. I like the NASDAQ long for obvious reasons. This thing can really be a beast. Driven hard too by Apple. NASDAQ weekly still straight up. We'll see where this finishes at the end of the week, but right now, look at this thing. Yes, the volume isn't spectacular. Yes, the volume is down. I don't care. Up is up, and it continues to grind its way upwards. It is so incredibly overbought up here that when the move to the downside happens, it could be very vicious. It could be very, let's just say it could collect a lot of dollars or a lot of points very rapidly. But when is it going to happen? I don't know. Yeah, I'm sure people back here were saying next week, and then they said next week, and then they said next week, and then they said next week, only to see this nice topping candle right here to say next week. Oops, and now it's next week. You see what I mean? You got to be so cautious about this. Calling a top can really get you in trouble, so be very cautious about that as well. Once again, Easter week, I don't know. I don't know. My gut is telling me no, I wouldn't expect a major drop, really. So could it happen? You bet it could happen, but it just doesn't. It's not common to see that happen. All right, so here we go. Up and at 'em. The weeklies still look very strong, especially from the NASDAQ perspective. Here's the SPX. Loving this overhead line. We got almost back to it today, and this is another reason to use a little bit of caution on any further pushes to the upside. Anything upwards, you want to watch carefully the 1420 to 1440 area, as we're going to be getting up and into some of these bigger areas of overhead resistance. The larger area to watch, 1385 period. I really like this move to the downside. Yes, it's a long ways from where we are right now, but for you more conservative traders that are just interested in the more major levels of support and resistance, this is definitely a more major level of support way down here at 1385. That is pretty big. 1400 is another big one. I like that one as well. But you can see that the bulls continue to shove this thing higher. Every time it looks like the bears might come in. If you're an Elliott wave person, these little 1, 2, 3, 4, 5 moves to the downside are killing you right now because they're met by nothing but 1, 2, 3, 4, 5 back to the upside. It's lather, rinse, repeat for the bulls. Be very cautious on any long trades. you take, as I've said over and over and over again, but don't be betting the farm on your short trades either. You have to wait for the more major levels to be broke. Be cautious. Here we are back to this overhead blue, which has been really, 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 did I say really? Because I meant really strong overhead resistance. Every time we've hit it, every time we've hit it, every time we've hit it, we've run away from it. Could be no exception right here. We're basically right back into it again. So once again, looking for maybe, if we can squeak a little higher. Now, it doesn't mean that we have to, hit it and immediately drop like a rock. No, 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 no. Just saying that when we hit it, we stop, we stop, we stop. We grind our way higher along it, but we don't actually jump over it and then come back through it, and jump over it and come back through it. This one right here, maybe a little bit, and here maybe a little bit, but you can see over time this blue line has been nothing but a winner over and over and over again. So very, very take note of this. Very, very interesting line, and if you don't have it in your charts, you need to put it in right now. Stop this video, put it in your charts, and keep it there. It's really, really a good frame of reference. Did not take us long to get right back up into it from last Thursday, then Friday, now today. We're right back up into this overhead resistance area. The VIX, between anything below 20 is complacency. 15 and 20 is where we stay in most cases. We've seen us coming down into the 14s, which is ridiculously low for the VIX. I got to tell you, it's ridiculously low for the VIX. You've got to go back to the middle of 07 to find these prints at this low a level. Point being, the complacency is still there within the markets. They're just fine with what the market's doing. There's no fear. There's not a lot of nervousness. And this grind to the downside goes all the way back to at least last October. So it is what it is. Today the markets were up. Now the VIX was up as well. That's a bit of a kind of a divergence there, but I don't really read a whole lot into that at this point. Just keep in mind that the VIX is low, which means complacency is high. There's no fear in the markets right down here. Weekly, same story. When we get above 20, we'll talk a little bit more about it, but as of right now, there's just no fear in the markets. FAS and FAZ, I throw these on here every time. A lot of people like to play these because they are the financial 3 times, but I'm going to show you this has been nothing but lather, rinse, repeat. It is stuck very, very well within this range right here. Call it 104 to 114. Let's just put a $10 trade on it, and you can see what's been happening here. Above 114, below 104, those are your levels to watch very, very closely, as you can see it extremely well defined here on the chart itself. Very well now displayed on the daily as well. Keep this in mind. This is actually for all intents and purposes right now, this is still a high base formation. You have to treat this as bullish until otherwise shown. Back below the 20-day is a great start for the bears. But until that happens, 114 and 104 are your levels to be watching, and this is a high base, and most of them resolve themselves upwards. So be very cautious if you're trying to short FAS right now. Make sure it proves it to you before you do anything with it. This just shows you that the financials still feel things are fine. The VIX is low, the financials are high. We got the FOMC talking tomorrow. I guess they're expecting good stuff. So we'll see what we get out of them tomorrow. But here's your FAS and FAZ charts to be looking at. This one well defined between 20 and 2150. Same thing on the daily, 20 and 2150, but look at this. All the way back to October, it's been nothing but down. Huge move here, 35 to 55, and since then it's just been a slow, gradual, bearish bleed. And what this is here is, of course, what would be a low base, which, of course, is usually resolved downwards. So here's your really good strong look at the FAZ and FAS. They're doing nothing but sideways consolidation here. If you want to trade these, great. You can trade them within that little range, 20 to 2150 on the FAZ and 104 to 114 on the FAS. You can feel free to trade them in between that range, but your more major areas to watch are breaks of the larger areas I just gave you. All right, that does it for this video. I will honestly try to be back with you guys again on Wednesday, give you a little bit of a recap of where we're at, talk to you a little bit about what to expect coming into Thursday, which should be little to nothing, and then we'll trace it out again. If you guys enjoy this, I have a newsletter, $28 a month. It's like $1 a day. If you enjoy this, you'll love the newsletter. They're upwards of 15 to 20 minutes every single day, except for Saturday. I do way more indices. I have drawn in way more lines. I get into a lot more detail. It's just a lot of a lot of a lot. I try to make it very, very value added. You can try it for a month. I don't require you go with it for 3 months or 6 months or a year or anything like that. You can sign up for longer if you'd like, but you're not required to by any means. You can try it for a month and see what you think, um, and then make a decision from there. I also have the mentoring. If you'd really like to know how to trade, you want to learn all of my deepest, darkest secrets, if you will, all the Jedi secrets, let me know about that. I'll give you some information on the mentoring courses that I offer. Those are all done from your house. You don't have to fly anywhere to do that. We do it all over the internet because it's a beautiful thing. And we do it on your time. So if you guys have a couple hours this night and a few hours on the weekend, then that's fantastic. That's all we have to work. You're not required to take any time off of work. You're not required to take time away from your life. You're not required to miss any kids' baseball games or anything like that. I work around your schedule and make it very, very convenient for you. So we're able to work on your time frame. Let me know about that. That's the mentoring. All right, and with that, I'll let you guys go, and we'll see you again later on in the week. Bye.